Before we get started, if you have any questions or need assistance reviewing this spreadsheet, I actually enjoy speaking to clients and potential clients. Feel free to contact me anytime by clicking on my name in the upper left-hand corner. A page opens giving my current date and time, the best hours for me to speak with potential clients, and one-click contact details for voice or video chat. When I'm preparing custom allocations for clients, I like to put the monthly allocation worksheet side by side with whatever monthly allocation study I'm using. You might find this the easiest way to do it until my new website is up. I'm pretty excited about the new website. All this information, the tech heads tell me, will be automated, live, and online, enabling you to create allocations with intraday mark-to-market performance. Let's get started. Let's assume you want to review detailed life of program performance for the allocation on line 3 of the spreadsheet. The net profit trading a single unit, never adding additional positions, and withdrawing all profits annually through the 31st of December 2024 was $2,384,466. Maximum life of program drawdown, measured from highest high to lowest low, marked to the market daily, $36,164. Distance from the previous equity high as of the 31st of December 2024, 0. In other words, this allocation was at a new all-time high. Reward risk, calculated by taking the lifetime net performance per unit and dividing it by the maximum drawdown, 65.93 to 1. Markets, models, and number of contracts traded in the allocation. Current total margin requirement plus maximum drawdown, $153,753, which is equivalent to the minimum starting balance to auto-trade this allocation. The minimum to capitalize this allocation, $153,753. However, I wouldn't recommend using maximum leverage. With contract valuations spiking higher over the last 6 years, I expect both profit and drawdown cycles to increase. If they don't, so be it. But if they do, I want all of us prepared. For this allocation, I'd capitalize it at $200,000 in cell H19. Of this $200,000, at least $150,000 would be in treasury bills collecting interest. When you're trading exchange contracts, treasuries can be used the same as cash to satisfy margin requirements. Let's review risk again and how it's controlled. The previous worst case highest high to lowest low drawdown, marked to the market daily, $36,164. In other words, during the life of this allocation, if you timed it perfectly to the day, the most you could have lost was $36,164. But with contract valuations surging over the last 6 years, this drawdown, as well as profit cycles, are likely to increase, and I want all clients, financially and emotionally, prepared for the potential risk of a higher drawdown. For this allocation, I've set the risk tolerance at $65,000. A risk tolerance level is nothing more than a protective stop based on the account's liquidation value. Let me walk you through this. On the initial balance of $200,000, if the account's liquidation value as of the settlement on any day fell below $135,000, all positions would be liquidated on or before the next settlement. If we fail to liquidate positions on or before the next settlement, our desk would be liable for any all losses forward. For more on risk tolerance levels, see Section 5 below. Now let's build out this allocation. The first market model listed in cell H3 is one contract of NASDAQ Model 12. I'm going to enter this one contract of NASDAQ 12 in cell I21. One Dow Jones Model 1 I23. Next, one gold Model 1004. One gold Model 2006. One silver 1004. One silver Model 2015. One silver Model 3008. One copper Model 1001. One copper, Model 2001. One crude oil, 1009. One crude oil, Model 2009. One gasoline, Model 5. One Bitcoin, Model 9. One Japanese yen, Model 105. 1 US dollar index, Model 100. 1 Swiss franc, Model 4. 1 Eurodollar, Model 10. And 1 Eurodollar, Model 1. I'm going to close up the monthly top 100,000 allocation report and focus now on the performance and risk information incorporated into the spreadsheet. The allocation spreadsheet at first glance may look a little overwhelming, but once you get used to it, you'll find for its purpose, it's far easier to work with and far more comprehensive than what most brokers or advisors currently provide, and with a lot less aggravation. Again, if you need a hand with this at any time, contact me. Now I'd like to walk you through the allocation spreadsheet and quickly review the information it provides, starting with the 3 charts on top. The first chart shows the allocation's cumulative net profitability as you build out the allocation by adding markets, models, and number of contracts traded. The slope of this chart quickly qualifies the consistency of the allocation's profitability. The second chart shows profitability by individual model. This provides a quick qualifier on which models work the best together. This can save you time, especially when you're trading multiple strategies in the same market. For example, 2 S&P programs. One uses wide volatility parameters, a market slope filter, and 12 days of data. The other tight volatility parameters, no slope filter, using 3 days of data. The third chart will give you a visual of the allocation's monthly net profit or loss as you add in or subtract markets, trading models, and the number of contracts traded. Cells J19 through J42 list market, contract size, and ATA model number. By clicking on any model number, a text file opens containing life of program historical data, disclosure of how we're calculating volatility, and the pivot points for that specific model. All trading parameters, every day's volatility calculation, every buy, sell, protective stop, and profit objective for the life of the program, every trade entry, every offset, every net profit or loss, trade by trade cumulative net performance, and net dollar distance from the previous equity high. K19 through K42, net life of program profit per market, model, and number of contracts traded. L19 through L42, active margin requirement per market, model, and total number of contracts traded. N19 through N42, net profit or loss over the last 12 months for that market, model, and number of contracts traded. P19 through P42, highest high to lowest low drawdown, marked to the market daily for that model, market, and number of contracts traded. Q19 through Q42, links to contract specifications and current margin requirements. D20, the allocation's net performance for last month. D21, net performance for the last 12 months. D22, best year. D23, average year. D24, worst year. D26 through D33, net performance by year. H38 through H46, monthly performance summary, which includes profitable, non-profitable, break-even, worst, best, and average monthly performance. D38 through D48, daily performance summary, which includes profitable, non-profitable, break-even, worst, best, and average daily performance. Columns B through E, starting with line 56, life of allocation, marked to the market daily performance, cumulative net profit, and drawdown. Columns F through L, life of allocation, monthly and annual performance. Columns Q through CJ, starting with line 56, monthly and annual performance by active market, model, and number of contracts traded. Columns DL through EP, monthly summaries by active market and number of contracts traded. Columns FJ through MM, marked to the market daily performance and drawdown by market, model, and number of contracts traded. Any allocation you create can be put on autopilot. My team takes care of all orders and monitors all positions 24 hours a day. You also can change your allocation at any time. For a video on how this works, open the link in cell B11. More importantly, you can define overall account risk for any allocation in writing before the first trade goes on. For more on how this works, open the link in cell B12. Let's dig a little deeper into the numbers on this spreadsheet to better prepare you for the risk and reward of participating in this program. H22, the allocation's highest high to lowest low maximum drawdown, marked to the market daily. H23, year, month, and day of the maximum drawdown for the allocation. H27, risk reward, qualified by the allocation's life of program cumulative net profit divided by the highest high to lowest low mark to market daily maximum drawdown. H28, life of allocation average annual gain. H30, maximum drawdown as a percentage of start equity. H33, current exchange margin requirement for the allocation. H34, risk tolerance. This is probably one of the most important numbers on this entire spreadsheet. Being able to deal with an allocation's disclosed risk tolerance is one of the most important factors that could decide your success or failure. How we calculate the risk tolerance level is taking the previous maximum drawdown marked to the market daily in cell H22, then multiplying the maximum drawdown by 175%. Why? With contract valuations doubling in many of the markets that we trade over the last 6 years, to assume profit and drawdown cycles won't get larger is delusional. Chances are they will. And you being adequately prepared, both financially and emotionally, for these potential drawdowns is just as important as my team's responsibility to maintain absolute and error-free trading discipline. If you're unable to comfortably deal with the disclosed risk tolerance in cell H34, you might consider one of the 50 alternate allocations linked in cell D11 or linked in cell D13 are summaries for the top 100,000 allocations trading a maximum of one contract per market. Linked in D14, summaries for the top 200,000 allocations trading multiple contracts with smaller contract valuations. Or if you're looking for a strategy where risk is absolutely defined on every trade and for the duration of every trading period, regardless of market volatility, see the strategy outlined on link 8 of the main menu. We trade this for our customers in everything from Bitcoin to zinc. Once you've decided on an allocation or trading strategy, capitalizing it responsibly is essential to being successful. How we calculate the minimum start balance in cell H32 is taking the total margin requirement for the allocation in cell H33, then adding the disclosed risk tolerance in H34, which gives us the minimum start balance shown in cell H32. Once I've decided on an allocation and capitalized the account responsibly, I define my maximum risk for the account in writing before the first trade goes on. For more information on setting a risk tolerance level for any account trading any ATA, open the link in cell B12. Should any of the models become problematic, we have the ability to identify the problem and implement a solution within 24 hours. We're going to need to do this in 2 or 3 out of the 24 models annually. Bitcoin was a perfect example. With its valuation exploding higher, its trading parameters are going to need to be monitored. Fortunately, all VBO models work off a percentage of volatility, so changes rarely need to be made. How we identify problems and provide timely solutions is using our proprietary software, which employs intelligent algorithms. This software required over a decade to develop, 18 prototypes, millions of dollars, and more than one healthy character builder to get it to perform in and out of sample on multiple related and unrelated markets. Each market and contract size traded has 4,800 execution files. Each execution file can run 20 or more years of data using any time period from 1-minute bars to monthly. In this example, we're using 1,500 trading days of 5-minute bars and running more than 31 billion possible combinations of the objective trading parameters. And this 31 billion possible combinations is just one of the 4,800 execution files. Because of the algorithms, each of the 4,800 files takes an average of only 10 seconds to run, requiring an average of only 3,213 loops, which is a speed-up factor versus an exhaustive enumeration of 9,697,841 to 1. In other words, what takes our software 10 seconds to run would require traditional software on the same computer doing an exhaustive enumeration 112 days to run. To run all 4,800 files using our software, it requires 13.33 hours. To do an exhaustive enumeration on the same computer, it would require 1,476 years. Each of the 4,800 runs sorts results by performance, logs the parameter settings, then runs these parameters on related and unrelated markets out of sample. The end result is we get the parameters that have the highest profitability, highest risk reward, and greatest durability on the out-of-sample data. The whole process to do one market from start to finish can be accomplished in less than 24 hours. I hope you can appreciate the amount of work that went into this program. The fact that we provide potential clients with full disclosure of trading methodology, provide all historical data for objective performance verification, and the exact trade entries and liquidation levels before trades occur. And the fact that we base compensation on 5% to 12.5% of net new high profits quarterly. As independent advisors, we hold no customer funds, nor do we work exclusively with one brokerage firm. When clients open a segregated account with an approved brokerage firm of their choice, where their money is guaranteed plus or minus trading activity, and this is going to depend on regulatory jurisdiction and financial suitability, we get limited trading authorization to place orders. Our incentive fee is billed quarterly, which you must approve prior to it being deducted from your account. Finally, you can change your allocation at any time, or liquidate your account in portion or all in any major currency in 2 to 48 hours. For a video that explains our fee structure, see link 12 on the main menu. Link 1.2, to track monthly and annual performance, trading all 24 models marked to the market daily. Link 1.3, marked to the market life of program daily performance by market and model. Marked to the market daily life of program cumulative performance, current and maximum drawdown, trading one contract in all 24 markets and models. Link 1.5, current top 50 active allocations, including daily, monthly, and annual performance. Minimums 25,000 to 500,000 US dollars or major currency equivalent. 1.6, summaries for the top 100,000 allocations trading a maximum of one contract per market. These Excel spreadsheets show life of program cumulative net performance for that specific allocation. Maximum drawdown measured from highest high to lowest low, marked to the market daily. Reward risk calculated by taking the cumulative life of program net profit divided by the maximum drawdown. Current total margin requirement for that specific allocation plus maximum drawdown. Markets and models traded in the allocation, enabling you to enter them into any spreadsheet and review daily, monthly, and annual performance. 1.7, top 200,000 allocations trading multiple contracts with lower valuations and margin requirements. In other words, micro and mini contracts. This spreadsheet is set up the same way and provides the same information trading multiple contracts with lower valuations. For more on what my team does and how it works, see links 3 and 4. To learn how to define your overall account risk for any allocation before the first trade goes on, see link 5. Our fee structure is explained on link 6. How balances are guaranteed plus or minus trading activity, link 7. Link 8, how to open an account. 9, links to hundreds of educational videos and resources. If you have any questions or would like to do an online review, I still enjoy speaking with my clients and potential clients. To contact me directly, see link 2 of the main menu. A page will open giving you my current date and time, my work schedule, one-click contact links for instant voice or video chats. Off hours, email or message me. My team will get back to you with the answers you need, along with links for additional information and/or verification.